for me, the biggest indication that a currency is in crisis is when its own nation prints it into oblivion. So what's different from the dollar? Okay, you can argue it's not Zimbabwe, it's the same principle. The US Fed, which is now controlled by the ESF, is printing money like there's no tomorrow.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today is the final part of my interview with London Paul, where he digs into the repo lines, what's really going on, whether that involves JP Morgan or not. So some fascinating things happening, which are really perhaps a turning point in this whole economic saga. So I think you'll enjoy hearing what he had to say, and here we go. Appreciate the time you've given us here today, and I think one other relevant one you've spoken about a lot on your podcast, the Sirius Report, which again I'll mention. The link is in the description below. We've seen these repo lines going on from the Fed for almost a half a year. I know they were just they were temporary, transitory, or whatever is the current Federal Reserve buzzword. Also interesting to notice that Tesla really began its spike back in September. So again, I would say there's the effects of some printed money. But curious, any updated thoughts on what's going on? And along with that, I hear JP Morgan associated with perhaps the cause of these repo lines, and anything you could add to that?
Yeah, I mean, as I originally said back in December 2018, I saw, and I said this on the podcast, that we're going to start to see repo. I mentioned it again, March, April time, May time in 2019. And of course, I'm not going to go through the history of what happened in September, mid-September 2019, but something massive broke. And it was for a whole bunch of reasons. I mean, the truth is repo, not QE. QE will never be resolved. Infinite QEs coming in. What did Powell telegraph the other day in a recent Senate hearing? Well, you know, if now apparently it was never, we're not going to have another major financial crisis. Now it's going, well, if we have one, which means when we have one, it's QE to infinity. And what's the reason behind the whole repo, not QE? Well, people keep trying to convince us because the dollar index is high. And apparently there's all this demand for US treasuries. Well, yeah, there is the demand that US banks and US primary dealers are being forced to buy up enormous amounts of US treasuries because they're on no foreign bias. So that, of course, puts a liquidity strain in the banks. It's not entirely why the banks are in trouble. The banks are in trouble for a whole bunch of other reasons, which we could talk for hours and days about. So the other thing is a lot of US dollars are now coming home and being siloed. And they're trying to hide this. Why? Because they don't want people to lose confidence, even though I'm not sure who has confidence in the dollar anymore. But equally, if you don't silo them, you're going to have hyperinflation. De-dollarization is gathering momentum, whether people like to believe it or not. There's enough huge amounts of evidence to support that. We know that some of China's trade in oil with Saudi is in petro-yuan. Iran certainly doesn't trade oil in the dollar. We know that for a fact. Russia is also not trading in oil dollars in oil the way they were, and the list goes on and on. And that is proven evidence. And people say, oh, well, it's not a banking problem per se. It's just that the banks are being forced to buy up all these treasuries. Well, there is a lot of structural problems, and there always has been in the banks since 2008. I mean, you know, there's enormous amounts of derivatives floating around in the too big to fail banks. I mean, just look at interest rate derivatives. There's, I don't know, $200 trillion worth. I mean, okay, that's notional value, but still, there are major problems, and the banks have been maxed out on all counts for a long time. This is just a tipping point that suddenly they were forced to buy up all these treasuries because there's no foreign demand. The reason there's no foreign demand is there's no confidence in the dollar. And part of the reason, and something I've mentioned on the podcast, it's my pinned tweet, is the missing so-called 21 trillion, at least. I'm not going to go into that. People can go and read it. That is a seismic event that a lot of people in the alt media don't even discuss. I don't know why they don't, because it's really the core and heart of the financial corruption inside the US.
Yeah.
And I think as well, the tier one capital requirements are stretched to the limit. People make all these excuses about the banks going, well, hamstrung by regulation, and then the Trump administration is basically trying to relax every rule that kept them from doing the very things that caused a lot of the crisis in 2008. So the US, of course, is having to issue ridiculous amounts of treasuries because of enormous budget deficits and who knows what else. Black holes are trying to fill. I mean, if 21 trillion was missing over a period of 98 to 2015 at least, I mean, it could be 100 trillion. What else are they hiding? So the US treasuries, for me, are now the subprime crisis of 2008, and it's now 2019, 2020. There's also the debt monetization they're conducting on behalf of the US government has been hidden, I think, within shadow banking. And there's a thing called a basis trade that's been implemented by hedge funds, where the base trade is someone's long US treasuries and short interest rate derivatives, for example. And a bank, I think, can't continue leveraging up and holding more US treasuries, of course, because in part this is true, they're constrained by the leverage imposed by Basel III rules. And I think in another development, and it's indicative that the US banks are seriously stressed, is the US Federal Reserve suddenly announced, well, we're not going to consider banks to be risky based on operational or risk management lapses. Now, to me, that's a blatant attempt to let them off the hook, because if you ignore operational risk activities, you're effectively allowing them to have free rein to do absolutely anything, no matter what the potential cost or risk will be. So what we're clearly seeing is the US Treasury, US dollar complex is getting increasingly leveraged and more unstable. Now, people keep saying, well, the dollar index is rising, this is strengthening the dollar. No, it's the reverse, it's weakness. And we know of all the bubbles that exist, for me, the US dollar is the biggest bubble. And of all, because who knows how much money, I mean, I widely now say the US dollar is in Weimar territory, and the bubble exists and has done since 2008 inside the banking system and inside Wall Street. And it's now starting to leak out into Main Street, and why we're seeing the official inflation figures in January were 2.5%, where if you look in reality, they're at least 10, 12% anyway. So add that on top of whatever they're suggesting inflation really is. And therefore, the argument is that they're only adding to this bubble inside this dollar bubble inside what they're trying to silo it and keep it out of Main Street. And it's getting bigger and bigger and bigger. And for me, the biggest indication that a currency is in crisis is when its own nation prints it into oblivion. So what's different from the dollar? Okay, you can argue it's not Zimbabwe, it's the same principle. The US Fed, which is now controlled by the ESF, is printing money like there's no tomorrow. And there's enough proof and evidence for that to be the case. So I see the dollar as an enormous bubble that is only going to get bigger and bigger. And if people think, oh, well, the dollar's relatively strong compared with other currencies, well, if you think the Forex markets aren't manipulated like everything else, then you're very sadly mistaken. They'll do anything to keep the illusion going, even to the extent that they manipulate the dollar against real money, which is gold and silver. There's your proof of how desperate they are to keep the illusion. And the problem is people are saying, well, gold's rising and the dollar's rising. This is unprecedented. Well, no, it's exactly what happens at the sort of latter end of the end game, because it's impossible now, to some extent, to contain the gold price. Not just you may argue, because of shortages of metal, but also because people are seeing the underlying problems inside the financial systems in not just the US, but Europe. That's from a Western perspective. I mean, that's one clear indication that most certainly is an ongoing problem. And as I say, I just don't see how anyone has confidence in the dollar anymore. And of course, they'll keep pumping the illusion that everything's fine with the dollar because they have to. Because when confidence in the dollar evaporates, which to a large extent in the world it has, hence the de-dollarization, hence the foreign rejection of the dollar. And once it's gone, it's game over. And if you want to talk about the collapse of the deep state, well, if they don't have the dollar as the weapon of choice anymore, what have they got left? I mean, they can't suddenly reinvent another dollar and the world's going to accept it like they did in the past, because they're not. So this is game over moment. Without the dollar, they can't bankroll anything. They can't threaten nations. They can't demand nations just take all their worthless treasuries anymore, because in a post-dollar world, the US will have to adopt a currency that's severely devalued, and no one's going to accept the dollar the way they did previously. So the idea as well that there's some, global elites who are going to crash the dollar and take the world over. Well, if that were true, they should have done it in 2008, because China was infinitely weaker and so was Russia. And it was infinitely less of a problem than it is now. They've spent the last 11 and a half years bailing water out the Titanic on a daily basis. It's just got to the point it's more acute now. And serious dislocations inside the system since September are happening more and more, with more frequency and more magnitude. And they're doing everything to stop it collapsing, which proves they're not trying to have some gigantic event to collapse everything. They're doing everything to try and prevent it. But they can't prevent it, and time's running out for them. And September the 16th was a watershed moment. It was indicative of not only sovereign problems. We referred to the issue with banks. Yeah, there's certainly, I mean, I talked about it in my podcast where there seemed to be some evidence of problems inside JP Morgan, but I also highlighted in a recent podcast in some detail events surrounding Deutsche Bank, which I came just by accident to start to look at Deutsche Bank for another reason. And it now seems that everything's been done to prop them up. But look at the share price at the back end of August last year. Look at the comments. Deutsche Bank seemed to be under serious strain, and then suddenly they're not any, or at least notionally aren't anymore. So something was done to prevent them certainly collapsing. And that's self-evident. The share price went from €5.80 to, I think at one point it was 10, recently €10, 30 or 40. I mean, with no real reason to see such a sharp increase in the price. Okay, they claim they're going through this whole process of revamping the company and getting rid of certain elements of the business and focusing on others and rationalizing the whole structure. Well, they've talked about this more times than I've had hot dinners and in recent years. So this is an indicative of some major changes in the bank. I think it was indicative that perhaps they were the bank that was at serious risk back end of August, September last year. And so there are many facets to this, but something has materially broken. And I use the parallel. It was literally a very similar date between Lehman in 2008 and what happened with Repo in 2019. I don't believe that's a coincidence. I think they're all interrelated. And in some way, they managed to stave off a Lehman. But I think the big difference, we know Lehman was sacrificed in 2008 for the so-called greater good. They're not in a position anymore to sacrifice anyone. So they have to keep the whole, insanity going for as long as they can, but they're out of options. Just look at the body language of the Fed now. If you look at Powell, he looks like a defeated man who knows what the inevitability is coming, and I don't see anything to suggest otherwise. So it remains to be seen how quickly it unravels, but I think we'll see increasing frequencies of major stress, and I've seen enough things in relation to some sort of financial data that suggests they're having major structural problems I think they've had at least 2 or 3 so far this year. And someone just sent me something which I haven't had a chance to read before we record the interview, which may be further indicative of blind panic now inside the Fed, or which means inside the ESF and by extension the Fed. So this is becoming more and more commonplace because They may have fought off the Lehman moment last September, but they can't fight the inevitable. They can delay it as long as possible, but in the process, they are just making the problem infinitely worse the longer they drag this out. And they're going to destroy the dollar more and more in the process. So if anyone thinks there's a magical solution, which I've seen people saying, we'll just devalue the dollar and miraculously bring home all our productive base overnight, and we'll still have the world's reserve currency, and the US is going to thrive. Well, I'm sorry, it's impossible. For the US to bring its productive base back and would take them 10 years. And here's the other problem. Who owns all the rare earth metals? China. So China has a lot of leverage over the West, and it could have caused the US untold damage during this farcical trade war, which we're not going to talk about today. But China has enormous amounts of leverage. The US cannot bring a productive base back overnight and put all the infrastructure in, which Trump should have done, as we said 3 years ago, to give the US any chance. So you can't have this scenario where people see the dollar can never die. And the argument, there's no alternative to the dollar. Well, there is. It's called gold. And which is real money. And that is the alternative. And that's what the rest of the world's moving towards. Hence, central banks buying gold, China and Russia buying enormous amounts of gold and telegraphing gold-backed digital coins, cryptocurrencies, call them what you like, and other nations talking about gold-backed currencies and the fact of settling trade in gold, which China is doing and is freely available with the petro yuan, even though people dismiss that as being impossible. It's a reality. If the Saudis want to settle their trade in gold, they can have the yuan or they can have the gold. China doesn't mind. So it already exists. It's just not universally known or understood. But that's the alternative to the dollar, is gold. And it's as simple as that.
It sure makes a lot of sense. And it was funny when you mentioned, funny, not funny, maybe not the right word, but when you actually mentioned Weimar Germany and Zimbabwe, I was wondering the other day if we actually knew the real amounts of how many dollars are out there and how little gold is left. I wonder if there was actually a way to compare whether the U.S. has gone past that, which maybe one day we'll find out. Although, Paul, I sure appreciate you joining me today. I'll mention again for folks that you do have a podcast, the Sirius Report, where you dig into all these things quite in detail, which I enjoy listening to. And the link to that is below the show. So just wanted to say thank you again for joining me. And certainly with the election year, I'm sure there will be no shortage of fascinating things to comment on, and we'll have to get you back on here soon.
Yeah, we can talk about that and some more extension of economic things. And in a broader sense, some geopolitical amounts. Yeah, we cover everything, and not just the economic stuff. We look in depth at all the geopolitics that goes on globally. So yeah, it was a pleasure. I'm really thrilled we've done this today and look forward to coming back in the future.
So that was the final part of my interview with London Paul. Hopefully you enjoyed that series. Go ahead and hit the subscribe button and that little notification bell right there. And that way you can stay posted for when we have new content coming out. Although to keep you tided over until then, I have another video coming your way that touches on some of the same things that London Paul shared, and I think you'll enjoy.